Hey folks, welcome to 9 to 5 to Freedom. My name is Alex, and this is week 8 of our high yield dividend account. So glad you found this video. Stick around for the full video as I share of something that's coming up soon. So if you are new to this channel is about my career as an electrical engineer and investing into real estate and now diversifying into high yield dividend accounts that will allow us to leave our 9 to 5. If that's something that you're dreaming about, this is what this channel is about, so make sure you check it out. I got plenty of content here. I'm publishing, trying to do a few videos a week. So check out these videos, lots of good stuff there. And we're up to 23 subscribers, so thank you folks for checking this out. All right, without further ado, let's hop right into it. All right, so the market has been a little bit choppy since last Friday. We've seen a little bit of a pullback on all of the indexes, the S&P 500, Dow, NASDAQ, Russell. It's been choppy, folks. Now, today, it is February the 28th, last day of the month, and seems like things are picking up slightly, which is good to see. I'm making this video around noontime, so as you can see here on our charts, we're seeing a little bit of an uptick in the in the green, and overall it's looking pretty good. Okay, so let's see here. Well, something that is on sale, which is Bitcoin. So if you got 85 grand laying around not doing anything, you can consider it. Again, not financial advice, but we've seen Bitcoin as high as 107, I believe, at some point. And we've seen this drastic drop in this last month. So we're at a 20% discount. But I think there's a lot of uncertainty with all of the tariffs that are going on, with United States imposing tariffs on China. I think that's at 10%. We got tariffs on Canada, Mexico. I mean, the U.S. gets most of their product from China, I would say. A lot of raw goods like lumber and oil come from Canada. So I think there's uncertainty around that. And as you can see, there's crude oil's down a little bit today, which, we'll see how these tariffs impact stuff. Tesla's been choppy too, folks. We invest a little bit into Tesla, and seeing this huge pullback year to date, almost 24%. It's quite a lot. I mean, imagine you're investing here around $400 mark, and you've seen a quarter of your account just obliterated. But Elon's a very controversial figure in the political space, and also I think the tariffs and things going on in China and Europe are impacting his sales, and we'll see how that works out. I think this might be a long-term play. Again, this is not financial advice, but Tesla is getting into robotics, and I think that's going to be the next step to marry up with our AI technology. Okay, so let's look at the SPY real quick here. This S&P 500 ETF. Year to date, we're up a little bit over 0.5%. As you can see here, beginning February 19th, we're up at $612, almost $13 a share. And we had quite a drastic pullback. I mean, if you look back 1 month, that's 2.5% pullback in 1 month. So obviously there's, again, concerns with the economy, with the tariffs, everything that's happening. But we'll see how this plays out. This is nothing to be, I think, too worried about. I think things will shake out. And historically, I was reading February is one of those months that typically sees a lot of these pullbacks. Okay, so now let's talk about our portfolio. Folks, for those who are new, we invested roughly $12,300 into some high yield dividend ETFs. Now, as you can see, folks, everything's kind of red here. And I apologize. I did buy a few call options. I bought some single stocks in here that are kind of muddying up our spreadsheet. But we'll try to clean this up here as we move forward. So don't worry about these top ones here. I mean, this is the only stock that's really green year to date. So everything else has been obliterated. XPay. Okay, so this is one of those from Round Hill that shoot for a 20% dividend for the year. Year to date, we're down 2%. We've seen a nice little comeback today, so I like to see that. USA, I haven't seen a single dividend from this one. I only have like 34 bucks in this one, so that's been down 2.35. JEPQ from JP Morgan down 2.39. Okay, so this is kind of right in line, I think, with what we're seeing with the S&P 500. I think this one, I got into this position a little bit later in the year. So I think that was mid-January, so probably why the cost basis is a little bit lower than year to date. So anyways, these ones are the ones I'm really interested about that I'm tracking: XDT, RDT, QDT from Round Hill. Okay, these three, these are the 0 date to expiration covered call strategy. We got on the S&P 500, RDT with the small cap, and on the NASDAQ 100 for QDT. Now that the NASDAQ one pays the most. I think that one pays around 40%. If we switch to dividend view, I'll tell you what that is. QDTE pays 40%. Yep. And then XDT is at 26% roughly. RDT is about 18%. So going back to this. So these I really like. I think these are going to be some great plays. You can see here, the difference here in our performance. Down 3.8% year to date, down 5.4, down 6.1. Quite a bit of a hit versus what the S&P 500 is doing, right? But we are getting those dividends in here. Now, if you see my last video where I said I've turned off drip, today the first day that I'm receiving these dividends without dripping them, except these cornerstone ones. And the cornerstone ones, CLM, CRF, I left these at drip. So drip is the automatic reinvestment when you receive the dividend. These I left on because every time they drip, you get to buy it at the NAV. So you get like a 30% discount, which is pretty phenomenal. And if you go to their website, here's CLM right here. Cornerstone Strategic Investment Fund, CLM. So right here, the NAV is 6.96. The price is 8.87. So premium at NAV. So every time you drip, you're making 27%, and these pay out monthly. So you're actually making 27% per month, which is pretty crazy. Now these funds are kind of funky because they will drop in value around rights offering, which we just had one last week. So as you can see, boom, we went from 896 down to 771, and we've seen a little bit recovery here today, which is nice. We'll see how much that climbs, but overall this fund's gonna it seems like it goes down over time, but you are getting pretty high dividends, 17% dividend, plus you get to drip at the NAV. So it's pretty interesting play. There's folks who make a living just living off of these ones. I mean, if you look at this chart, it looks like garbage, but there's a way to play this. And if you want me to cover more on that, I can make some videos on it, but don't want to dedicate the whole video to that. So anyway, so these took a pretty massive hit this year, but we had a recovery today, which is good to see. 2.6% up, 4% up, so I like that. All right, these are the yield max. We're moving down here. YMAX, YMAG. These are these big cows that pay a lot of dividends. All right, we are seeing a small little recovery today. Overall, we're down 12.5%, folks. Quite a bit of a pullback this year. I'm not going to get into my call options. RGTI. Okay, Coney, MSTY. Okay, these two. Again, from YieldMax. This is on the Coinbase app. Coinbase has been a little bit choppy here. If you look up CoinStock, let's see here, year to date, we've seen a pretty drastic drop here this year. So we're down like 17%, and I think just in the last 5 days we're down 11%. So most of that's been from there. So we've seen that pullback, but this one, it pays like bananas type of dividends. So if we search Coney dividends yield max, I'll just take you to the website. 142%, folks. So I mean, I'd be okay going down, 26% if I can make 142, but we'll see how they hold up. This is experimental, folks. We're not investing a lot of money in here. We want to see how these work out. MSTY, this is on the MSDR stock, again from YieldMax, down almost 30% for the year. Seeing a little recovery today, 3.6%. And TSLP from Curve, okay? So this one's down almost 30%. Small little recovery today. And then we got FEPI from Rex Fund. I think today we're getting a dividend. I only have 46 bucks in this one. Okay, so now let's look at the dividend view. Okay, dividends, again, these are ordered from highest paying to the lowest. Okay, Coney, MSTY, YMAX, YMAG. We got QDTE, we got XDT right here, 25, 40%. All over the place, right? JPQ, 10%. XBay, I don't know why this is showing 8.7. This is supposed to be 20. Fidelity, please fix it if you're watching this video. Okay, so CLM, CRF, 17%. All right, so we are on target for $5,300 almost for the month. Okay, now I've been tracking these. Like I said, I turned off drip. Today we received some dividends, and I'll show you this. This is where I'm tracking. I don't want to bore you with spreadsheets. Just zoom in a little bit here. This is what I got paid today, 228. Okay, XDTE paid $7, QDT 8 bucks. Up here, as you can see, this is what I have invested in there. All right, $1 from RDT. Woohoo! 29 bucks from YMAC, 25 bucks from YMAX. Okay, so these should show up in my account next week. And once they settle, and then these got reinvested. So total today made 130 bucks, which is not bad. You can do something with that. So again, folks, I am using some margin. I think we're at like 25% or so. Yeah, we're up 30% margin at this point. And, I guess when we have a bloodbath like this, that margin starts to increase there to make up for the losses. But $130 today overall, 641 bucks year to date. And this is the stocks we have invested. Again, 14.8 thousand. So let's see what that is percentage wise. Divided by that. I'm not sure what that. What is that saying? P2. Okay, 4.32% in 2 months, less than 2 months actually. So not too bad. I mean, if you take 4.32, I just call it 2 months, divided by 2.16% times 12. That's a 26% return on investment in dividends. But again, we want to see what happens to our balance, right? So as these dividends are paid out, we want to see what happens to the actual values of these accounts, how much they're going to erode. So if we're going to be seeing these, double-digit erosion, that's not going to be too happy about that. But if we're going to erode maybe a few percent in a year, maybe under 10, and if we can get that 30% difference or 20% difference, I think we'd be in a pretty good shape. So that's what we got, folks. This is a summary of the performance for week 8. Again, market's been a little choppy, but I think it'll balance out. We'll get over this, and end of the month, I'm going to be moving a pretty sizable amount of money. So we'll see what I'll be investing in there. What do you think? Do you think this strategy makes any sense? Should I go heavier into just an S&P 500 fund? Do you guys like the Roundhill, the YieldMax? Please leave a comment below and give a like to this video. Subscribe if you haven't yet. We'll see you on the next one, folks. Thank you.